Hello and welcome to this Autovista Group webinar, How to Recharge Europe's Battery Electric Vehicle Market. Now, due to a slight technical difficulty, this is a re-record of the original webinar, but please don't fret, we have all of the same great content for you today. I'm Tom Geggus, the editor of Autovista 24, and I'm going to be your moderator today. On our panel, we have experts from across Autovista Group. The first is Christoph Engelskirchen, the chief economist at Autovista Group. Then we have Christoph Ruhland, Director of Business Development at Autovista Group, and Christian Schneider, Director of Content at EV Volumes. Thank you all very much for joining me today.
Hi, Tom. Nice to be here.
Hi, Christoph. So, what can you expect from today's webinar? Well, we're going to be answering three major questions. The first, can Europe's BEV market make a comeback? The second, how can the adoption be accelerated across new and used car markets? And third, could China recharge Europe's BEV market? Now, all of this is going to be followed up by a Q&A, and certainly was during the original recording. However, if you found that your question wasn't answered from the first time round, please do reach back out to us. We'll leave a link where you can submit your details at the very end of this recording. So please make sure that if you didn't get an answer from us, that you do submit that question again, reach out and get in touch. So, if you see any data or insights during today's recording as well, then equally feel free to reach out to us. Now, before we get into our very first segment, I want to take this opportunity to highlight all of the fantastic content we have on Autovista 24. We explore new car markets, used car markets across the world. We take apart the latest technological innovations and feature big business stories. And we do all of this with interactive articles, podcasts, and videos. All you need to do is sign up to our daily email to get our latest insights. Just find the banner at the top of the homepage. And so we come to our very first segment of this webinar. We're looking at Europe's BEV market and asking if it can make a comeback. So, Christian, maybe we can start with you. There seems to be an awful lot of negative discussion around Europe's BEV market at the moment. But I want to know that, is this really accurate? And is this negativity around the adoption of technology fair? How are we seeing different adoption stages across European markets?
Yeah, Tom, you're right. I mean, there are definitely different adoption statuses across Europe, and this is also why there's maybe not a single answer to your original question. First of all, what we can see on the slide here is the BEV share across different European countries, and also in which of the classical market adoption phases those countries are at the moment in terms of battery electric vehicle share. And what we can see here is that some markets, maybe non-surprisingly like Norway, they reached roughly 90% for passenger cars and battery electric vehicle share in the first quarter of this year. So there we definitely would have to ask us the question if we are struggling going from early adopters to mass market. Also in Sweden, we see they are at the moment somewhere between 30 and 40% roughly in the first quarter in terms of electric share. So also Sweden is already in the middle of the mass market with the battery electric vehicles. Also there, this is not a question at all, I would say, to ask if we can make that transition or not. Those countries, they made it already. But we have quite a few other countries, especially also the bigger European car markets like Germany, France, and UK, but also Italy and Spain, who are at the moment in that quite critical phase of going from this early adopter phase more into a mass market. So in those, over the last years in those countries, we have been able, or car manufacturers have been able to attract quite a lot of those progressive customers and also quite a lot of fleet customers to join the EV revolution of the market. But now we are really at a stage where we also have to reach more people. So also really go into mass market where we have customers have different needs. And what we can see at the moment, and this is a little bit maybe blocking this transition is in this very critical phase where we want to attract people who are maybe a little bit more skeptical, not always open to new technologies like those early adapters. We see that in quite a lot of countries in Europe, that governments or other players in the market are start to reduce their efforts in this transition. So we are stopping incentives for battery electric vehicles in quite a few countries, for example. Also, our investments in charging infrastructure are not having the same pace like in the last years, and this could be a blocker. And we should stay focused if we want to make that step to going to mass market in those countries as well.
And have we seen BEV sales really affected across all OEMs, or is that spread not quite balanced?
Interestingly, we have seen that especially for the bigger car manufacturers, or the ones that have sold a lot of electric vehicles already last year, let's say it like this, we can see, for example, in this chart, that from the first quarter last year to the first quarter this year, most of them lost a little bit of their BEV sales. So, for example, Tesla is selling now 8% less battery electric vehicles than in the same period last year. Also, Volkswagen is struggling. It seems to struggle a little in the first quarter. But on the other hand, we see that quite a few of the brands which haven't sold so many cars last year, like BMW, Mercedes, Volvo, but also Hyundai, they increased their sales. I mean, BMW is now in the first quarter, they sold 43% more battery electric vehicles than last year, which is, of course, maybe also too few more launches of those smaller players in that period where this could come from. But we see a very diverse picture. So there's no general downward trend across all OEMs, I would say, that we can observe at the moment.
That's really interesting. Thank you, Christian. Now, of course, we're talking predominantly there about new car markets, but I think maybe it's time to turn to used car markets. And for that, I'm going to turn to Christoph Engelskirchen. Christoph, maybe you can take us through what's happening on used car markets with a demo of Autovista Group's residual value intelligence tool.
Yes, certainly, Tom. And I think we have to look at the chart that you can see in front of you a little bit like a proxy of what's really happening in the market. And I'm showing you here the price index for used car prices by fuel type in Germany. Quite an important market in terms of size of it and hopes, in commercializing battery electric vehicles. And you can see here that if we put all the powertrain types to an index of 100, which was at a time we didn't have the corona pandemic. So this was in 2020, February 2020. So everything just completely unraveled after that. But so we put everything at 100. You can see that 4 years later, actually even 4.5 years later, battery electric vehicles have come under pressure in this proper price index calculation, whereas internal combustion engine cars, so this is diesel and petrol cars, have really gained a lot of value for consumers and are also stabilizing again after having seen a bit of a drop, towards the second half of last year. So what does this tell you? I mean, it basically is proof to the theory that this transition to the mass market isn't so smooth and isn't happening for battery electric vehicles automatically. And the reason for it is that nobody has been waiting for this technology. It's not the better technology. It is the more appropriate technology that we have decided as a society, and we have elected politicians to manage through this, that this technology is the one we're looking at from a emissions perspective. And we can see that there's still a long way to go in terms of demand on used car markets as well. Now, the other point that you are probably wondering is how does this look differently between countries? And And I can tell you that it doesn't look so differently when you look at the overall pattern. Yeah, for example, let's look at France, which is a market that is also quite advanced in terms of testing different battery electric vehicle technologies. And you can also see here that battery electric vehicles have been struggling the most. And we have heard about Sweden being so far ahead of the curve. But even here, we see the similar picture. So battery electric vehicles are a bit more difficult to sell these days compared to, again, the ICE engines, even in the markets where this technology has a larger market share. And maybe one last look at the UK, because I understand that a lot of people in the audience are also from the UK. We see here a more elastic development because it is more difficult in the UK to manage supply and demand imbalances, and the whole transition to battery electric vehicles out of ICE, internal combustion engine, into BEV has created a huge mismatch of supply and demand. And that's why we see here a more elastic development, but it doesn't mean that it's not also going to be recovering as well. And one important last point, Tom, I'm running over a little bit here, but it's really important to state that this is looking at the past. It's very much looking at the past. It doesn't tell you anything about the future. So that's a different view that we have to adopt if we want to talk about future, because these are values of used cars which are in the market for 2, 3, 4, 5, 6, 7 years, all weighted by observations. So if you would like to know, what is the future going to bring and how residual value is going to develop going forward, we're going to talk about it a little bit today, but don't just make the mistake of just continuing these trends. Yeah, they are very much looking at the past, what has happened in the past.
Fantastic. So a really great insight into what has happened, but to find out more, of course, you should absolutely continue to follow Autovista 24 and, of course, Autovista Group more broadly. And that actually takes us to the end of the first section of this webinar. But it's a really good place to start from for our second segment of this webinar, where we look at how BEV adoption can be accelerated in both Europe's new and used car markets. So, Christoph, I'd really like to continue from where we were just discussing and take a look at Europe's BEV market and asking, can it really make a comeback?
Yes, and the answer is somewhere on this slide. It's a bit dense, but I think it's important to have all the facts on one page when we talk about EU legislation, because that is a driving force behind BEV adoption. It's not that consumers love the technology so much that they're willing to pay a higher price for it. They're not. So on the left side of this chart, you see the emission targets. These are CO2 emission targets that have been set by the EU until 2035. And the important figure here is 0, right? So by 2035, you will have to have cars registered new into the market that have 0 CO2 emissions. Now, there's a lot of discussions around what technology can deliver this: synthetic fuels, fuel cell. Maybe there's something that we don't know about yet. And and of course the battery electric vehicle. Now, the one technology that is commercially most ready and most scalable and most affordable at this point in time is the battery electric vehicle. So that's where the industry is heading, because there is very strong industrial policy in place. And also, so far, all the OEMs have always achieved the targets, right? So this is the reality check. This one, WLTP targets. In red and in blue is the NEDC targets, and you can see that OEMs have been able to hit all of these targets because there are ways to manage that, right? So you can pool your emissions with others, which is happening a lot. You can get extra credits for more plug-in hybrid vehicles of a certain range that you register. So there is a way for politicians, for the EU to manage this carrot stick approach, but it's important to have a carrot and stick approach and Norway is a prime example of that. There were massive incentives, but also disincentives for buying ICE vehicles, and that really pushed everyone into that new technology. We have to maybe talk a little bit about elections. Tom, do you want to do this now? European elections are over, or do you want to keep this a little bit to the end?
No, by all means. I think we're on the topic. We should explore it.
I think we've seen that the elections, first of all, made some parties that are in the right and far right, region of political opinion stronger. So they have benefited from this election, but we also see that the center of the EU Parliament, the party that dominated the Parliament before, has also gained in terms of shares of the votes. So it is now a question of alliances and coalitions and who's going to be creating majorities around certain topics. It's going to be complicated to change the laws in the EU. It's going to take years if somebody wanted to do this. So so even if there are talks about changing some of these targets, I think it's not going to happen so soon. And probably the better way to think about it is whether they are being nuanced a little bit, so that you can get maybe some extra credits, some exemptions for certain behaviors that you display. But I wouldn't at this point in time challenge that these targets stay in place like this, because if they don't, this is going to create so much more turmoil in the market and so much more uncertainty, which is never good for for anything that you do with industrial policy. So I'd rather say there might be some nuances here and there around what exceptions you might be able to get, exemptions you might be able to get.
So obviously there we're talking very in a very focused manner about the impact of regulations, regulators, governments, etc. But maybe it's time for us to then pull back and take a look more broadly at what different stakeholders can do, Christoph. So what can the big impacts be from different stakeholders in the industry?
Yeah, we have one example here, which is a bit of an elephant in the room. Probably not anymore because everybody is talking about it so much these days. But it is something that hasn't really seen the daylight, or it isn't really, there is no standard approach to this topic yet. And the topic I'm talking about is battery health certification. So we've published an article some time ago where we said and calculated that there is a remarketing challenge of almost 100 billion euros, when it comes to electric vehicles, just because the buyer of an electric vehicle cannot assess the quality of the battery and will make the assumption that it's really bad quality. And the seller has no way of making the proof or making the point that the quality is really good, because it costs money and nobody believes them anyways. So it's going to be a vicious cycle, of quality being worse and worse and worse. And this is not even an idea that that we had as a company. This is an idea which is long-standing. A Nobel Prize was won around this. The paper is called "Market for Lemons," and it's about this information asymmetry. So you know about something, but you cannot make a strong signal into the market. And this is the problem here as well. So what we need is something like a battery health report, which is an assessment by someone credible, someone independent. And you know that this is working when you book a hotel on one of the websites. Many of you will really look very strongly on the ratings. You will read the ratings. So you're looking for signals that someone else is giving you, not the seller, but someone who's independent in this discussion. And this is what needs to happen around battery quality. Then you get high demand. because you can actually make a case out of better quality being the better product, justifying higher pay for the product, and you will get better remarketing results. So this is something that stakeholders can do, because the battery is the biggest component in the battery electric vehicle when it comes to value and loss of value.
Christian, obviously we've been talking throughout this webinar so far about battery electric vehicles, but it would be potentially amiss of us to not also recognise the impact of plug-in hybrid electric vehicles. So maybe we should quickly explore the importance of those types of powertrains and how they could affect the electrification of Europe's market.
I think that this whole PHEV technology was maybe ruled out a little bit too quickly over the last years. And also, I mean, it's not only about the technology, don't get me wrong. I mean, the technology is, I think it's a good technology, and it has been in the past. It is more like the whole use cases of the technology and how they have been communicated into the market, and the governmental action that happened around this PHEV technology that have come into place. This, I think, wasn't properly set up in the past. So all of us, I think, have heard of those, I wouldn't call it horror stories, I'd just call it stories around charging cables after 3 years that are just coming back unused in the used car to the dealer, and all of those stories, so that people only use the ICE engine and not the electric engine. And so I think all of us have this in mind. And apart from it, I think, is coming from limited battery sizes in those cars in the past, maybe a little bit. So I think, especially in a lot of fleet cars, maybe, and this was still the biggest share in the market in the last years, the battery size was maybe not sufficient for most use cases. So what we can see, for example, on the left is this chart is showing the average built-in PHEV battery size across Europe. And we see that if customers get the chance to get a PHEV with a bigger battery and also higher range, of course, than coming with a bigger battery into those cars, they opt for getting the bigger battery and higher range, even if it's coming maybe also at a slightly higher cost. So we definitely can see that customers prefer bigger batteries, which are maybe fulfilling more their daily using profile. So this is what we see now coming into the market. And what we can also see, and this is just the spearhead, I would say, of the PHEV battery sizes, is a few examples here on the right. So this is, we really see that now, especially SUVs with battery sizes of 30 to 40 kilowatt hours coming into the market, which is also allowing those customers real driving ranges of definitely more than 100 kilometers, even in those big cars. And this is something which will meet customer expectation, daily usage behaviors way more. And it could be still an alternative to purely battery electric vehicles on our road, like Christoph showed before, to net zero in 35. So of course, afterwards it will be tricky, but on our way to get there, it could be a good technology to help some customers to get on board, especially those which don't have a very proper charging infrastructure, either at home or publicly in their environment at the moment.
I'm glad you brought up charging infrastructure, because whether you drive a battery electric vehicle or a plug-in hybrid electric vehicle, the existence of infrastructure for recharging is effectively a cornerstone of uptake. So maybe we should explore infrastructure quickly, Christian.
I think what we see here on the left is the charging stations in Europe in 1,000 units over the last years, so since 2020. And at EV Volumes, we track those every half year. We observe what is going on with those charging stations in Europe, but also globally. And we saw that in the last years, always growth rates in charging stations across Europe, AC and DC together, of always way more than 30%, so 35, 41 in the last years. So quite significant growth rates. And from last year to this year, this is the first time, at least of the last few years, that we can see that the new installations in Europe are dropping below this 30%. And I think it's good, at least, that we are still growing charging infrastructure in Europe, but the speed, as I said in the beginning, we should keep that pace if we want to move, especially in the bigger countries, from early adopters into the mass market, because especially for the mass market, a public infrastructure is even more important maybe than for the early adopters. Early adopters normally have a relatively high income. They maybe have their own house or own flat where they have maybe a home charging solution. This is not the case for everyone if we want to reach the mass market. And there we have to provide sufficient public infrastructure to fit all of those needs and have a comfy driving experience or charging experience for battery, but also plug-in electric vehicles. What we see is, and this is on the right, that the charging that it's a quite different picture between the countries in terms of charging infrastructure. So what we try to plot here is the battery electric vehicles per charging station. So that means as more electric vehicles are there per charging station, as worse is the situation in the countries. We see that especially in those countries where we had significant battery electric vehicle growth rates over the last years. So Sweden very on the top, but also Germany and Norway, where we had significant growth over the last years. We see that the situation is maybe not ideal, so that electric vehicle car sales were maybe growing quicker than the installation of new charging stations. And I think, again, we have to be careful that we are growing this together, because at the moment, this is only new battery electric vehicles per charging station that we are measuring. And at the moment, a lot of discussion is about the new, reaching the targets on the new car market and so on and so on. But of course, we are also getting a growing used car fleet, and also those cars have to be charged. And for the used car buyer, it is a little bit like with the mass market. And there's a tendency that used car buyers have less home charging possibilities than people who buy a new EV, because normally people buying a new EV have higher household income and tendency to have an own house and wall box at home and all of that stuff. So the charging infrastructure really has to be ready also for the used car and mass market situations. And this is what we see here on the right, that the situation is quite different between the countries.
Absolutely. Thank you, Christian. So that brings us on to our third and final segment of this webinar, and that is exploring the impact of China on Europe's BEV market. So, Christoph Ruhland, yourself and Christof Engelskirchen were both at the Beijing Motor Show earlier this year, and I know you saw a lot of different exciting models. So, if you could tell us how you think China might be able to recharge Europe's BEV market.
Yeah, with pleasure, Tom. So as these pictures show, you could sense that all the show was driven by a very, very positive spirit of optimism. Yeah. First of all, the fair was completely crowded and full of mostly very young car enthusiasts. Yeah. And when a CEO of a hip brand like Xiaomi, so you can see it on the picture on the bottom on the left, walked around the fair, then they were followed permanently by a crowd of people that were equipped with cameras and selfie sticks. Yeah. So my feeling is that the Chinese are now no longer just copying what the established OEMs are producing, but that they now have a very strong offer in the area of battery technology, digital functions, and also connectivity. Yeah, and on the next slide, you can see some trends that we have discovered. Thank you. So, for example, the ongoing trend to very, very luxury MPVs, as you can see here, or also a completely new trend we discovered is the trend to camping. Yeah. We had a lot of meetings at the fair, and during one of those meetings, I've asked one top manager of a Chinese OEM, how long is your product development cycle? So to develop a new car from scratch until the serial production? And the answer was 2 years. Yeah. So if you think that in Europe this product development cycle is probably like 5 years, yeah, then this explains why the Chinese are able to launch such a big number of new models and new brands, yeah, that appear to be popping out of the blue. Yeah. So what does it mean for Europe? So combined with aggressive pricing levels, yeah, small brackets, if these will not be absorbed by the new tariffs that will be probably imposed in July by the European Union, bracket closed, this competitive offering will make EVs more accessible to a wider range of consumers in Europe.
Then maybe it's time we take a look at the different entry strategies we've seen brands from China, more broadly even Asia, adopting.
Yeah, so we have seen many different market entry strategies from Chinese OEMs, which we tried to list here on this chart. So I will guide you through. Very important, the brands shown on the left and the right, they are just examples. Yeah, so the chart does not claim to be exhaustive. So the first dimension is the product. So here we see brands from the Geely Corporation, of course Volvo, but also Lotus and Polestar, that they build very Europe-centric cars. Yeah, so cars with a design. Designed for Europe, fitting to the European customer taste. While we see that others, like Maxus from SAIC Corporation or BYD, they have more the global approach. So basically what they do is they sell what they already have in China. And of course, they need to adopt it to be able to sell it here. But usually those models are always available in China first. The second one is the brand or the brand heritage. So on the left side, you see some brands, what we call born in Europe. So MG so SAIC has bought the MG brand because this gives them a European history, a European heritage, and already some awareness. While others have to rely or want to rely on a fresh start. Yeah, so here we have Chery's Omoda and Jaku, Chang'an Steeple, Xpeng, and also Zeekr. The third one is a distribution model where we see differences. So we see some brands like VinFast, Vietnamese, not Chinese, and NIO that rely on brand stores in certain cities, while MG and BYD, they rely on large physical dealer groups. Yeah. Speed of expansion, of course, you cannot be or cannot launch in all markets at the same time. So there's always a launch sequence. However, we see brands like Hongji and Zeekr that they focus only on a very narrow market scope. So they are present only in the Nordics and now also in Germany. While again, BYD and MG, they are now present in more than 10 markets in Europe. And finally, the question of manufacturing. So where do you produce the cars being sold in Europe? So do you do it in Asia? Yeah, and then of course the cars being imported into Europe are subject to the increased import tariffs. Yeah, or do you produce in Europe? So this is BYD. They have announced to build up a factory in Hungary. Great Wall as well, and Chery, they have bought the old Nissan factory in Barcelona.
Great. Well, with all these different brands entering Europe's market, I wonder how they're going to be able to differentiate themselves.
Yeah, so this slide we try to call the key success factors for Asian brands in Europe. Before I start to go through them, I think the biggest challenge or obstacle for every new entrant in Europe is to understand that Europe is not one market. Yeah, it's not one country, so it's different. We have 44 markets, 25 languages. We have different regulations, different consumer preferences, and so forth. Yeah. Having said this, in our opinion, we think the first obvious, very obvious key success factor is, of course, to have a strong product at the core of a brand. And all the Chinese products that we have seen so far, all the models, they have a very, very high build quality. So the quality of the new cars coming is really astonishing. So this has nothing to do with the former tries that we saw a few years ago, yeah, unsuccessful attempts to enter Europe. And of course, brand, you need to create brand awareness quickly. And for example, BYD is now sponsoring the Football European Championship. And this is, a very, very clever thing in our eyes. The second one on the top right is the distribution network. So we think that it is not enough to rely just on a few brand stores in bigger cities. We think that you need to be a large physical network to be successful in Europe for sales, but also for after sales. Yeah. Therefore, if you want to build up this quickly, you need a dealer network. So you need to use a network that is already there. So if you would try to do this by your own, this would take years. So the window is open now for the Chinese. Therefore, they need to rely on distribution through big dealer networks. The third one is financial services. So if you click once more, Tom, in Europe, more or less 80% of all new vehicles sold are being leased or financed. So this means that you need, as an OEM, you need a strong financial partner or partners to be able to serve the 80% of this market. Yeah, otherwise you can only sell to 20% of it. Yeah, so this is very important. And finally, please do not forget about the used car strategy and the used car market. Yeah, again, on the right, 80% for 80% of the new cars, the residual value is the key parameter. So you need to consider RVs. Yeah, so this should be one of your top 5 points in your strategy, amongst others, because strong residual values will help you to successfully sell new cars. So to do this, you need, of course, data. You need to understand residual values. So as Christoph explained before, and of course, therefore, you also need to employ the people that work with the data, that analyze the data, and most importantly, that they will derive decisions out of this data.
Well, I think we're actually going to travel straight from that point, Christoph, into our Q&A section. Now, as mentioned earlier on in this recording, unfortunately due to a technical glitch, the previous recording of the webinar wasn't accessible. However, that does give us quite a great opportunity in today's recording to explore the impact of some more recent news, which is the European Commission's announcement of provisional tariffs on battery electric vehicles made in China, which of course has been enormous news and touches on almost every single topic we've discussed in today's recording. So I'm actually going to come to you one at a time, if I can, and just get a sense of what you think of what this means for Europe's battery electric vehicle market, for Chinese brands, for European brands producing vehicles in China. So Christof Engelskirchen, I'm going to start with you if I can.
Yes. So, I mean, most stakeholders knew that something was coming, and we heard different figures floating around, but from different people. And now the result, the likely result, is including the 10% of tariffs that were already in place, that we are ending up in an area more or less between 30 and 50% all in. Yeah, so including the 10% that had already been established. Now that is significant, right? And 50% is probably going to be so significant that the affected OEMs will have to consider right? Reconsider what products they're going to launch, at what margins, in what segments they're going to be able to launch cars. The 30% for some, and obviously this is depending on whether OEMs collaborated with the EU, and also on the level of subsidies that were in place in the investigation that has already happened. So that could be more manageable, right? So 30% could be a bit more manageable to compete still successfully in Europe. Now, all of this is under review, under threats of retaliation as well by China. So I think it is important to see that this is not going to be escalating, but contained. Yeah, so it's important that the right people talk to each other and come to a sensible agreement, so that this doesn't escalate into a trade war, because we are also quite dependent on China as a market to absorb our products, not just cars.
Christoph Ruhland, could I come to you next?
Yeah, sure. So I think it has a significant impact. So I have the same opinion than Christoph. So just to add on what Christoph said is, as the tariffs are just binding for BEVs and not for hybrid cars, full hybrids, mild hybrids, or plug-in hybrids, I think that we will see that the strategy of Chinese OEM will change to go more in that direction. So we will see more plug-in hybrids like BYD has recently launched. Yeah. So with then probably bigger batteries. Yeah. Second point is, of course, prices will increase for BEVs. That's for sure. So as a part of the price increase can maybe be absorbed by the margin. But depending on how much tariffs the brand has to pay now in future, a big part of that tariff will be given to the customer, who is then to pay. So we will see higher prices. It's also important to understand that these tariffs are also binding for cars from European manufacturers, that they are being produced in China. For example, the BMW iX3 is produced in China. So then it would come with a 31% import tax now instead of 10%. Yeah. Same is true for Polestar. All Polestars are being produced in China, at least to my knowledge. So we will see increasing prices. Another effect that we will see is that the countries in Europe where those EVs will go might change. So there are, of course, countries in the EU that are not part of the Europe that are not part of the EU. So I think we will see more EVs, Chinese EVs, popping up in the UK or in Norway, or in other regions like Middle East or Brazil. And finally, the pressure on Chinese OEMs to build up their own production sites here in Europe will increase too. Yeah, so to not be subject of the import tariffs. Yeah, so I think we will see in the future more Chinese corporations that will announce to build a factory here in Europe.
Absolutely. Finally, Christian Schneider. Maybe I can come to you for a take from EV Volumes.
I will just make it short because a lot of things I've already said, but maybe on Christoph's point on the production of also European OEMs. So what we see and what was already announced before is, for example, that some OEMs like Volvo just announced that the EX30 production should move to Belgium. Now at the moment it is produced in China, but even before the final tariffs now were coming out or have been announced, some decisions have been already made. The same is also happening at the moment, by the way, for the US market. So there we see that some production capacities, like for the EX90, for example, is built up to avoid those tariffs for cars which are produced in China. So I think we will see a little bit more of this coming, that production is relocated to Europe. And also because the pressure on other regions or influence on other regions, what Christoph mentioned, is I also think that this is something which could get more. We see this already, like especially in emerging markets, like in South America, like in Middle East, like also in some African countries, in some continent, in some countries. We see that especially by BYD is building up strong influence already in those countries and is starting to sell already for the electrification level that we are in those countries, a significant amount of cars. So they are one of the first movers in some of those countries, like we had it in Europe with Tesla, for example. I mean, they have been the first ones bringing, let's say, also cool electric cars into the market. We see this in other less developed regions and countries in the world at the moment with Chinese brands like BYD, who are one of the first movers into those markets. And we saw where Tesla is nowadays in Europe.
Thank you very much, Christian. That does unfortunately take us to time today for the webinar. We're in fact running slightly over. So I'm going to take this opportunity once again to say, if you asked a question in the original webinar and you hadn't heard back from us, first of all, our apologies. But if you'd like to reach out to us via this link on screen, which is autovista24.autovistagroup.com/EV-webinar, and fill out the form with some contact details, we will make sure we get back to you. So thank you so much for watching the rest of this webinar recording. It's been great to see so many people in the original recording, and it's been wonderful, hopefully, to have so many people watch this re-recording. Now, this has only been the very tip of the Autovista Group Insight iceberg today. If you'd like to stay on top of some of our developing trends, then you should really reach out to find out more. If you need to manage business or asset risks, you'll need to stay on top of things with the very best of data, which is where we can help with Autovista Group's suite of products and services. So this includes the residual value tool that Christoph used earlier, with its retail price index aggregated by brand, country, fuel type, and even more. And then we've also seen into some of EV Volume's data sets today, which is absolutely expansive. So that tracks forecasts and major trends such as EV market share and battery demand. And there's a huge range of other Autovista Group products and services too. So make sure you do follow this link on screen, and we can make sure we'll get back to you with the product that's just right for you. And lastly, but by no means least, don't forget to sign up to Autovista24's email for the latest industry analysis. You can just click the link at the top of our homepage, which is autovista24.com. You can just go straight there. Thank you all so much for attending, for watching. Christoph, and Christian, thank you so much for joining me today, and have a wonderful day.
Thank you, Tom.
Thank you.
Thank you, Tom, for having us.